Hey everybody, I'm Logan Alec. I'm a CPA. I own Choice Tax Relief. A lot of the folks that we help here at Choice Tax Relief are business owners, often small business owners, maybe even solopreneurs, independent contractors, meaning when they get paid, whoever's paying them is not taking taxes out of what they're paying them, right? When you're a W-2 employee, when you start work, you give your employer what's called a W-4 form, right? And based on that, your employer takes out of your paycheck Social Security taxes, Medicare taxes, federal income taxes, state income taxes, maybe some other stuff too, depending on where you live. When you're a business owner or when you're an independent contractor, no one's doing that for you. You are responsible to pay your taxes in to the government. They expect to be paid quarterly, okay? So I thought I'd make this video for not only for our clients, but also for self-employed people everywhere. How to calculate your quarterly estimated tax payments. Because it can be confusing, right? And actually what kind of prompted this is a journalist. Her name's Chloe Bryan. She recently reached out to me, sent me an email, and said, hey, I'm doing this article for the site Mashable on how to manage your quarterly taxes as a solopreneur. And I basically gave her my thoughts in this article. You know, she mentioned me. She quoted me, throughout this thing. And I'm basically, I gave her an email with all kinds of stuff, and, she kind of summarized it in this article. But what I want to do in this video is kind of give a longer version of what's in that article. And I'm going to share with you three methods you can use for calculating your quarterly estimated tax payment. Okay. And they're going to go from, let's say, least accurate and easiest to most accurate and potentially most time consuming. Okay. So method number one. Method number one is simply using the prior year safe harbor method. Okay. Warning, using this method will protect you from the penalty for not paying estimated taxes, but it may not accurately estimate your actual tax you're going to owe for the year, and you may have a surprise tax payment you have to make along with your return, okay? Because you're basing it on your previous year's tax liability. So how this works is you look at your previous year's tax return, and I'm assuming here your 1040 Schedule C, you don't have a corporation or anything set up. You look at your previous year's tax return, look at your total tax liability on that return, okay? Before your withholdings and your payments and your extension payment and all that. Look at your total tax liability for the previous year. Divide that figure by 4. Boom. Pay that in every quarter, okay? And what are the due dates? Due dates for Q1, April 15th, okay? Due date for Q2, June 15th. Due date for Q3, September 15th. Due date for Q4, January 15th of the following year, right? That makes sense? So those first 3 are paid in the current year. Q4, you can pay it by January 15th of the following year. All right? Easiest way, you'll get an exact amount to pay in. This will protect you from the underpayment of estimated tax penalty. Note that if your adjusted gross income last year was more than $150,000, you have to take your prior year tax liability and multiply that by 110% and divide that by 4, and that would be your quarterly estimated payment each quarter. Okay, so if you make a little more, then you have to pay a little more. And if you're filing status with married filing separately, if your AG on your prior year return was more than $75,000, same thing, you got to use 110% of prior year. Now remember, using this prior year safe harbor method will protect you from the underpayment of estimated taxes penalty, but it may or may not accurately calculate how much you're actually going to owe in taxes for this year, right? So the amount you pay in throughout the year quarterly may be off from what you're actually going to owe, and you may have to come up with some more money by April 15th, right, to pay to true up what you actually owe for the year, right? And if you don't pay by April 15th, you'll be subject to a failure to pay penalty, 0.5% a month or part of a month that taxes go unpaid, okay? Second method, I call this kind of the back of the napkin, down and dirty method, okay? Under this method, you basically, and again, this only kind of works if you you're not expected to jump tax brackets between last year and this year, right? If you are, maybe increase the percentage I'm going to talk about a little more. Next method is to look at your total tax liability last year. Okay, your total tax liability last year before your withholdings and before your payments and everything. Divide that by your gross receipts in your business. Okay, so let's say your business grossed $100,000 last year. Okay, and let's say you paid $10,000 in taxes. Then that percentage is 10%, right? Now, this can be thrown off, right, if you also have a W-2 job, but I'm kind of just assuming that your 1099 work is just your full-time thing here. So that's kind of telling me that, look, for every, now, of course, there's tax brackets, right? The first little bit of taxes, you pay 10%, then there's another bracket for 12%. It's marginal, it goes up, right? But we're just kind of trying to estimate here, right? There's also self-employment tax that gets thrown in as well. So, if your total tax liability, regular income tax and self-employment tax, was $10,000 last year, off of $100,000 gross on your Schedule C, you can estimate, again, this is not going to be perfect, okay? And if things are wildly different from one year to another, you may get the estimated tax penalty, right? But this is just something a little bit better than just strictly looking at prior year's liability. Take that 10% figure, right? And every month, whatever your gross income is in your business, set that percentage aside for taxes and pay that in quarterly, right? So if in January you gross $3,000, let's say that percentage is 10% from last year. And let's say now in January of next year, you gross $3,000, right? Set aside $300. February, you gross $4,000, right? Set aside $400. March, you gross $3,000. Set aside, $3,000. Set aside another $300. So now you got $1,000 saved up for Q1. Pay that in by April 15th for your Q1 estimated tax payment. See what I'm saying? You could get a little more granular with this if you're doing well with your bookkeeping, right? And you can base it on your net. But knowing that so many solopreneurs, independent contractors don't do the best job with their bookkeeping, they might know their gross, but they don't necessarily know their net on a monthly basis. That's why I said you can base it on the gross, but it would actually be probably a little more accurate if you base it on the net. Okay. Third way, and this is the most accurate way, and this is the way we do it if you paid us a choice tax relief to do this for you quarterly. Under this method, what you do, and you got to keep a good set of books for this, so we know the net, right? Or you could hire us to do your bookkeeping, so you know what your actual net is, right? How we would do it is this: we'd get your books, let's say January through March, right? January through March books. And let's say you netted, for those 3 months, you netted $1,000 a month. So let's say, or let's more than that. Let's say you netted $2,000 a month. So let's say you netted $6,000 for Q1, right? In your business. What we would do is we'd multiply that by 4. We'd annualize it. Based on the data we have, we're going to assume that this individual is going to make $24,000 for the year. Now, if there's a seasonality aspect to the business, this can get more complicated, but if not, we'd annualize it in that way. And then we would basically run a calculation. Okay, let's assume based on this current year's tax rates, this individual's current year tax situation with dependents and everything, how much taxes he or she going to owe on $24,000 of income for the year? Boom. Let's say it's $5,000. Okay. Then we would basically say, all right, we're estimating based on the year-to-date info that you're going to owe $5,000, and we're going to divide that by 4, right? So that's $1,250, and we're going to say, all right, your Q1 estimated tax payment is $1,250. Now, that is the most accurate way of doing things. It does obviously require you to be keeping your books, and it requires you to have access to some kind of software or spreadsheet, or maybe even an online calculator where you can put in, hey, I estimate I'm going to make this much this year. Here's my filing status. Here's some other stuff about my tax situation to estimate your liability for the year that you would then divide by 4, right, to calculate your Q1 tax liability. Then in Q2, what we would do to annualize the Q2 net income is multiply it by 2, right? calculate that tax liability. Now divide that by 2, because now you should be 50% paid in by Q2, and whatever the difference is between the Q1 payment and what you should be paid in for by now, right? We would say that's your Q2 payment. All right, so that's the most accurate way to do it. That's how, you know, a CPA would do it. But you know, doing the estimates ways that I talked about before, it may get you there. It may get you close, right? But if your business is highly variable, it's kind of feast or famine, you probably have to be a little more granular, a little more accurate with it. But if your business is kind of steady Eddie, right? Pretty much the same throughout the year, you know, experiencing growth, but nothing like too crazy, right? You could probably get away with some kind of an estimate. Okay. These are just rules of thumb. This is not tax advice. This is not legal advice. I am a CPA, but I'm not your CPA. This is for informational purposes only, of course. Thank you so much for watching, everybody. If you would like us to handle your tax work, you know, your bookkeeping, keeping on top of these quarterly tax payments, your tax filing, doing some tax planning for you, give us a call at Choice Tax Relief, 866-8000-TAX. That's 866-8000-829. Or fill out the form on our website, choicetaxrelief.com, and we will reach out to you. I also have some other interesting tax videos that may be of interest to you as a small business owner. Thanks so much for watching, everybody, and I'll see you in the next video. Bye-bye.